It's Tuesday, October 3rd, 2023. Please make sure to like, share, and subscribe. We have so much to talk about today. You may want to get a cold drink, iced coffee, whatever your beverage of choice is. We have a lot to talk about. This video may go a little longer than I wanted to. I had to actually take some articles out of this pile of articles because there's just too much. But I want to start with this first one today. Most of you have probably already seen the news. Kevin McCarthy, House Speaker, first in history, he's gone. He has been ousted. So apparently 8 Republicans and all the Democrats approved a motion to vacate. So he is gone. Now I bring this up. First off, apparently a small group of Republicans had a real issue on how he handled the extension of the government shutdown. Secondly, I bring this up because it is just more uncertainty now for this country. How is this going to affect the markets tomorrow? I don't know what the markets are going to do tomorrow, but this, to me, is just going to add more uncertainty. I don't think it's going to be good for markets. Markets got absolutely destroyed today. We'll talk a little bit more about that. Dow Jones down 430 points today. NASDAQ down 248. 10-year bond yield. Where are we at right now? We broke 4.8 earlier today. I think right now it's sitting at 4.79 and some change. But watching how quickly these markets are falling apart, the volatility, I believe that things are beginning to break right now. And one of the concerns that I have as I make these videos, as I break this stuff down daily, as I try to absorb as much knowledge as possible and read as much data as possible, we're going to come to a time, ladies and gentlemen, where people are going to break down and cry when they realize what just happened. I truly do believe that we're going to come to a point, we're going to come to a day, and we're going to wake up, and the majority of this country is going to say, what just happened? Most of you will already know what happened, but many people, while they're watching their football games and baseball games and supporting the movie industry and doing whatever they do, while they're dealing with their addictions, while they're doing all this, things are happening right now that are going to affect each and every one of us. So my advice today, as always, is get rid of the addictions, put down the booze. Nothing wrong having a drink or two, don't get me wrong, but if this is controlling you, you need to end it right now. If you have a food addiction, you need to deal with it right now. Get rid of just things in your life that you don't need. We are coming to a point here, ladies and gentlemen, a fork in the road. We're coming into some very, very serious times. And it seems like every day this stuff is just magnifying. And things are beginning to accelerate. And people are going to wake up one day and they're going to weep, they're going to cry, and they're going to wish that they had prepared. They're going to wish that they didn't believe everything they saw on TV. They're going to wish that they didn't listen to their politicians and believe everything that they said. You know, I was having lunch today with a very, very dear friend of mine, Eric. And he's been traveling all over the world lately. Very, very good guy. And you know, he's a very educated, successful guy, and he is so concerned about what is taking place right now. He's concerned about the safety of the U.S. dollar, the future of the U.S. dollar, the safety of his family, just the safety of society, and what's happening right here to his country and what's going to happen to good, innocent people. And one of the places he advises to be is gold. Physical gold, ladies and gentlemen. You know, I'm watching the whole thing break down just like you're watching right now. If you don't have any gold, if you need a place, go to my link down below, SD Bullion. I don't care where you buy from. I don't care if you buy it or you don't. But if you need a good, reputable place and you're on the fence and you're thinking about buying some gold or silver, especially with these pullbacks that we've had. I think this is a great time to do it. It's not financial advice, but this is what I'm doing. That's what my friends are doing. That's what people in my family are doing. And when you have a nice pullback like this, I think it's a great time to buy. If you think gold and oil are going to stay down and not explode, you believe in Santa Claus. That's the only thing I can say. You are not paying attention to what is going on. You know, it's amazing that people still do not see or understand what is going on. They're so brainwashed by the television. Well, here's something that's going on. CNBC mortgage rate races towards 8% after hitting a high not seen since the year 2000. Well, I checked bank rate 5 minutes ago, 30-year fixed rate mortgage, 7.8%. You know, a few months ago, I said, a small forecast that I made, that you're going to see the 30-year, that you're going to see people paying 10% plus on a 30-year. And right now it's 7.8%. If you don't have an 850 FICO, if you're not putting 20% down, you're probably right now paying very close to 9% for a 30-year right now. So this is going to continue to collapse the housing market, sales, mortgage apps collapsing. We've never seen so many homes fall out of contract as we did last month. I think the number was over 16%. And builders are discounting properties. They're buying down mortgage rates. They're throwing in incentives. And so we don't even know how much builders are discounting properties right now because they don't include the incentives. They don't include the mortgage buy downs. I think the average number is, I think that the new home builders have discounted homes about 13%, but that does not include the incentives or the buy downs. So that's probably closer to 20%. Where the existing homeowner, the existing home seller has no idea what is going on. And I probably had 5 homes, 6 homes sent to me today, 5, 6, 7 homes yesterday, 7 homes the day before, multiple homes that have had price reductions. And it's just the price reductions aren't even close to where they should be. But I'm beginning to see more and more properties hit the market. We know that there's a lot of homes under construction right now that are going to be hitting the market. And we know that there's a lot of shadow inventory on the secondary home market, vacation homes, and Airbnbs, short-term rentals, that we're going to see coming to the market at some point. I think 2024, we're going to see a lot of these short-term rentals hit the housing market. And listings are only going to continue to go up while the pool of qualified buyers is only going to go down. Here's another one today from Fox Business. Job openings unexpectedly jump in August. The Labor Department said today that there were 9.6 million job openings in August. Now, this is important because the Fed is looking at this. This does not make the Fed happy. They want to see the labor market tighten up. They don't want to see nearly 10 million job openings. Now, yes, 2 things. Most of these jobs, a majority of these jobs are going to be part-time, low-wage jobs. Secondly, do you even believe this number? Do you even believe the data of 9.6 million? I don't believe it. And the majority of the jobs out there now are going to be in leisure, hospitality, things in those sectors. But I don't even believe the 9.6 million. But guess who does? The Fed. The Fed's going to use this. They're going to use this, and they're going to justify, in my humble opinion, another rate hike in November. I do believe we're going to get another one. And ladies and gentlemen, boys and girls, I know that everybody on the television believes that we're not getting rate hikes next year. It's very possible that we do. Many still believe we won't even get another one this year. We're getting one in November. How many people last year said that the Fed will never raise rates? Like basically never. And what have we had? 11 rate hikes, 4 rate hikes at 75 basis points. And these same people are still saying that the Fed is not going to raise rates after 11 rate hikes. The hope that they depend on, the hopium is gone, ladies and gentlemen. You know, don't think that the Fed is your friend. The Fed may purposely bring these markets to their knees. Let me know what you think. Comment down below. Do you believe in the data? Do you believe we're going to get another rate hike? What do you think is going to happen next year? Is the Fed going to continue? One thing that I think most of us can agree on, well, there's a lot of people in the television that think the Fed's going to pivot, but the Fed clearly said in the last meeting, higher for longer. Now, here's one on the hedge today. Peter Schiff, banks have a bigger real estate problem today than they did in 2007. Now, I jotted some of this down here. I'm not going to go over the whole article, but I'll give you a good chunk of it here. He says banks are more vulnerable today than they were in 2007. They always tell us the situation is much different today. We don't have a problem in the subprime market. The problem is different this time, he says, and it's actually worse. He says back then, the problem was defaults. Interest rates rose. People could not afford to make their mortgage payments, and this forced banks to foreclose. Banks couldn't recoup their loans by selling houses because the real estate bubble was deflating. The problem was banks loaned out a lot of money with 0% interest rates or negative amortized mortgages. And then housing prices went down and people started defaulting. Banks began to lose money. He says today we have a different scenario and it's much worse. Banks are now losing money on the mortgages. Banks would be better off, he says, if people defaulted right now today on their mortgages. He says 3% mortgages were not that uncommon a few years ago. He says they would love to repossess a home today at 3% and resell it at 7%. He says another problem for banks is that the high interest environment that we're in right now, that they're losing depositors, and while they're losing depositors, those depositors are putting money in money markets and getting 5.5% yields. He goes on to say, so private businesses can't get credit because all the credit is going to the government to refinance these massive deficits. So what do you think about that? That does make sense. I mean, I know people out there that got mortgage rates at 2.65. So a lot of people a couple of years ago got 3%, they got below 3%. Yes, I'm sure the banks would love to take those properties, sell them, and get over 2 times the rate than originally they're getting at 3% or sub 3%. So that does make sense. Here's another one from the hedge. WeWork on brink of default as $95 million in interest payments skipped. They're down 14% today. Just more indications that we're going to see more businesses file bankruptcy. Many are going to go under, more unemployment coming. And as it's happening, we look at a time right now in a place where the Fed's raising rates and inflation is still going up. So what do you do when raising interest rates to fight inflation makes inflation rise even easier? But if you don't raise rates, you still get inflation. That's kind of where we're at right now. And I think that the Fed is in very, very big trouble here. And I think that this whole house of cards is about to come down. Now, I don't know if that's 6 weeks from now, 6 months from now, a year from now, 2 years from now. I don't know. But things do not look too stable. The foundation of the U.S. economy is in ruins. It is crumbling. It is rotted. And it is going to come down. So they're raising rates and inflation's not going away. At the same time, if they don't raise rates, inflation isn't going to go away. I guess, this points to all of the out of control spending. Maybe if the government stopped spending trillions and trillions of dollars and running a $2 trillion deficit, maybe the raise in interest rates would be working right now. But as of right now, it's not really working. The hedge, 30-year yields hit highest since 2007, one day after CNBC's Rick Santelli suggests the 10-year could go to 13%. Now, that is over the next 7 years. He says the 10-year bond yield could go to 13, even 14% over the next 7 years. Today, as I mentioned earlier in the beginning of this video, the 10-year broke 4.8. It's sitting at 4.79 and change right now. And the next question is, who is going to buy all this paper? Who is going to buy all of it? I wouldn't be buying it. I'm sure you would be buying it. I mean, I look at the only option out there right now as gold. Cash and gold. And yes, cash is on borrowed time, but you still have to have it. But, you know, some of my closest friends who are very, very successful will say the same thing. There's no other place right now other than to be in gold. You've got, you know, if you have a lot of money right now, it's not even about making more money. It's about protecting the money that you have right now. They're coming after your money. They want your money. They're going to tax like crazy. They're going to be watching your businesses very, very closely. Property taxes going up, insurance going up, the price of everything going up. But property taxes, sales taxes, you name it, everything's going up. We've got wealth taxes out here, out in LA County, the wealth tax, the mansion tax. I mean, they're going to go after anybody who's breathing to make up for these losses. And it's never going to be enough. But if you've got money, you're probably not even worrying about making more money right now. You're just worrying how to protect the money that you have because they're coming after it. King World News, from bad to worse, it's becoming catastrophic for tapped out consumers. Very good article here. It says here, banks are tightening commercial and industrial loans. Those loans have fallen by $2.2 billion week ending September 20th. That's the lowest level in a year. Auto loans continue to tumble. Auto loans outstanding sit at the lowest level since December of 2021. Consumer credit card debt soaring. We know it's well over $1 trillion. While savings rates plunge in America, U.S. savings rate at 3.5%. Prepare for more rate hikes, ladies and gentlemen. And anybody out there that says, well, who cares about rate hikes? Well, if you have a credit card, if you have a student loan or you're looking to apply for a student loan or a new vehicle or mortgage, you're going to care because they base all this off the 10-year bonds, the 10-year bond yield. And typically, as they raise interest rates, those 10-year bond yields go up. And when those 10-year bond yields go up, that means your credit card rates, your auto loan rates, your student loan debt rates, literally your personal loan rates, everything connected to debt, servicing debt, goes up. And the 10-year is going up. I think it's going to break 5%. I don't know if it will do it this year, quite possibly. We have plenty of time, ladies and gentlemen. Think about how fast, how many basis points it can go up. We've seen it go up 20 basis points in a day. So it is not out of the realm right now to think that we're going to have mortgage rates at 8+% by the end of this year, 10-year bond yields at 5% or close to 5%, oil at $100 a barrel. This is all happening in real time, ladies and gentlemen. The people out there a year, 2 or 3 years ago that used to laugh at this stuff, they're not laughing any longer. They have disappeared. Some of these people at this point are probably homeless. They're jobless. They're done. And I feel sorry for these people. This isn't about who's right or who's wrong. We have a long way to go here. But many people are already tapped out. Many people now are already on the streets or they're moving back home. They're sleeping in their car. And they never thought that this would happen to them. You know, all those cranes, those big cranes working on, you know, the big apartment buildings or the big commercial buildings in Denver and Dallas and Phoenix, they're going to disappear. They're going to disappear. I'm going to go out to Talis, the big housing development out in La Quinta that has completely been shut down. Disneyland is on the chopping block right now. They don't know if Disney is going to end that thing or when they're going to end it. I think that at some point it is going to be shut down also. So a lot of things are happening. It's getting very, very expensive to borrow money, and it's going to get more expensive. And look, these Disneyland and these huge developers, they have very, very intelligent people, I'm sure, watching these markets. I would hope so. But I'm sure that they see that we are heading straight into a cliff here. And eventually we're going to see some of these large housing developments pull the plug. Without any doubt. Any of these large commercial projects, I'm sure we'll see that many of them are going to pull the plug here. It's just getting too expensive to borrow money. And then they have to think, who's going to be buying homes in Disneyland for $2 million? That's another question. Who's going to be coming in and buying homes in Disneyland out here in Rancho Mirage for $2 million? U.S. money supply contracting, down 3.69%. And falling. Now, this is an interesting data point. In the past 150 years, the U.S. money supply has only contracted 5 times, this being one of them. And when this happened, this is during recessions and the Great Depression. And now it's happening right now. So the question is, are we in a recession right now, or are we in a depression? Comment down below. I want to know from all of you, currently, are we in a recession or depression? Or do you believe that we're in neither? That there is no recession, there is no depression? I believe that we're in a very severe recession right now, and we are entering right now the beginning stages of a depression. We are in a transitioning point from a recession into a depression. And remember, in 2024, when they finally admit to all of you that we're in a recession, that's when you know we're in a full-blown depression. As of July 2023, the M2 money supply was 3.69%, below the all-time high recorded in July of 2022. This marks the first time since the Great Depression that we have witnessed a meaningful decline in the U.S. money supply. So, very, very interesting. Does it mean anything? It probably does. I think, again, this is telling us something. When you have bond yields inverted and now the money supply contracting, these things usually are canaries in the coal mine. They're usually indicators of where we're at in an economy. And it looks like we are here once again now, I believe, entering the greatest depression America has ever seen and will ever see. So here's another one today coming from the hedge. A lot of, so much news out there today. So much is happening. Please stop telling us everything is fine with the economy. It is not. This was a good article. I'll just paraphrase a little bit. Nobel Peace Prize winner Paul Krugman told CNN, there is a peculiar disconnect between how the economy is doing and how the public is feeling about it. CNN asked him why people were not understanding that they're living in a sunny economy. Krugman said, we don't really understand why this is happening, but there is a real profound disconnect going on. I don't know if Mr. Krugman has been to a grocery store lately. I don't know if he's been to a gas station lately. 1 mile down the road, super unleaded at Chevron is $7.19, Paul Krugman. They just act like if the television and a Nobel Prize winner tells us that everything is okay, we should just believe it, even though when we go to the grocery store, everything continues to go up. While they're raising rates, everything's still going up. While they're raising rates, price of gasoline is going up. Price of everything at your Walmart is going up. Everything continues to go up. Have you seen anything go down in price since they've been telling us that inflation is going down? I haven't. Everything seems to either be the same price or higher. But it is interesting how many people won't believe how much they're spending at the grocery store or the gas station, but they'll believe people like this on a news channel asking, why don't people understand that the economy is doing well, that this is a sunny economy, even though people cannot afford to even feed their families at this point, and you have millions of people now totally dependent on credit cards to even pay for essentials. A couple months ago, 20 million households in this country couldn't even pay their utility bills, but the economy is sunny. I'm going to finish with these last two articles. Texas Representative Henry Cuellar carjacked at gunpoint by 3 assailants. I believe this happened in Washington, D.C., very, very close to the Capitol. And again, we talk about the social decay, the social breakdown. This is how bad it's getting. Now, Democratic representatives are being carjacked in Washington, D.C. Here's another one. And this one really stood out. I watched this last night. Philadelphia motorcyclist stomps through back windshield of a car carrying kids caught on camera. So I don't know what led up to this. Maybe the car accidentally cut the motorcyclist off. These are a bunch of motorcyclists driving through the city like maniacs. Lots of them, like 100 of them, maybe more. And one of them got upset at a car, got off his motorcycle, jumped on the back window of the car and just punched out the whole back window of this car because he was upset. Lady got out of the car, got in his face. He headbutts her with his helmet. She knocks his motorcycle over, and then things just seem to go on from there. But think about this. People getting upset because you cut them off, now they jump on your back window of your car and blow out your back window. And then you get out to confront them. Then they headbutt you with a motorcycle helmet. And then the woman knocks the motorcycle over. This could have really escalated into a much more serious situation. Luckily, it didn't. And then there's 2 little kids in the back seat the whole time. Okay, glass is shattered. I mean, you could have really hurt somebody. But this is the insanity that we're dealing with now, and that it is going to accelerate also with this collapsing economy. So I want everybody to be very, very aware. You know, avoid confrontation at all costs. But there are people out there that are very, very capable of getting very, very violent. So understand that, avoid conflict at all costs, and make sure you have some training. If you're in decent shape or you want to get in shape, get some decent training, because everything, if you're involved in a confrontation, a situation, you will resort back to your training. And if you have no training, you're resorting back to no training. You're resorting back to nothing. You're going to be in very, very big trouble. This situation for this woman could have got really, really ugly. The best thing we can do now is get in the best physical shape, best spiritual shape, financial shape, and train. You've got to have training. You've got to know how to deal with violence. And unfortunately, we live in a world now that you cannot depend on law enforcement. You're going to have to depend on yourself. You can't depend on your church. You can't depend on your politician. You can't depend on the system. You can't depend on the police. You're going to have to depend on you. You can't depend on banks. You've got to be your own central bank. We talk about this repetitively day after day after day. If you're new to this channel, this may be all new to you. You need to wake up. You need to smell the coffee. Stop denying what you're seeing. Things are escalating, ladies and gentlemen, and they're going to get absolutely out of control. And just because you live in Mayberry, just because you live in a small town in Indiana or a small town in Wisconsin, does not mean that this isn't coming to you. This is going to affect everybody, in some areas more than others. But this is becoming a nationwide epidemic of crime. And now, today, as I end this video, I'm going to say this really quickly. I just watched a news special on where you have these organized gangs coming from South and Central America, and they're picking out some of the nicest neighborhoods in America, and they're going in and robbing these beautiful homes. So they're coming in, and they're strategically mapping out some of the wealthiest areas in America. Could be Beverly Hills, could be the Hamptons, could be Newport Beach, and they're mapping these areas out, and they're hitting homes. And so now we're going to see more and more organized crime coming from all over the world here, preying on the wealthy. Be careful out there, ladies and gentlemen. You know, whether you're poor, middle class, or wealthy, it doesn't matter. It doesn't matter what color you are. It doesn't matter what race you are. It doesn't matter what you believe in. You can be a victim here. If you have something somebody wants, it could be your shoes, or it could be a Rolex watch on your wrist, could be a car. Be ready. Use and exercise situational awareness, number one. Get some training. Be prepared to deal with violence, ladies and gentlemen, because it's coming and it's not going to go away anytime soon. God bless. Stay safe.